In the global world of crypto finance, no asset plays a more critical or more debated role than Tether. USDT is the core liquidity engine that keeps crypto moving, from trading pairs to remittances, from emerging market dollar access to institutional settlement. Tether has become the unofficial reserve currency of the digital asset economy. Welcome back to our series, where we break down crypto projects in a clear and actionable way, helping you understand their strengths, weaknesses, and long-term potential. As always, this content is educational and not financial, legal, or tax advice. Do your own research before investing in any project. At the end of this video, we'll give Tether a final score out of 100. Let's dive in. Team and development. Tether launched in 2014 by Brock Pierce, Reeve Collins, and Craig Sellers, but over time, control has centralized under Tether Holdings Limited, now led by CEO Paulo Ardoino. Unlike decentralized protocols with open governance, Tether operates as a private financial infrastructure company overseeing the world's largest stablecoin. In recent years, the team has expanded its focus beyond stablecoin issuance into energy infrastructure, AI hardware, Bitcoin mining, and emerging market payment rails. The organization is highly centralized yet operationally consistent, delivering strong execution with clear concentration of power at the top. Score 6 out of 10. Use case and utility. USDT's utility is both straightforward and enormous. It is the dominant digital dollar for global users who need stability, instant settlement, and on-demand liquidity. Traders use it as a base pair across exchanges. DeFi platforms rely on it for collateral and liquidity pools. Businesses leverage it for cross-border payments, and millions worldwide hold USDT as a hedge against inflation and currency collapse. Tether has also become essential infrastructure for market makers, remittance companies, and decentralized applications. Its role is so foundational that crypto markets would seize without it. Score 10 out of 10. Tokenomics. USDT operates on elastic tokenomics. Supply expands or contracts based on redemptions and market demand. As of early 2026, circulation is approaching approximately $185 to $190 billion, reinforcing USDT's position as the dominant stablecoin by a wide margin. Backing has become a far more transparent aspect of Tether's operations, with frequent reserve disclosures and regular third-party attestations. A large portion of reserves sits in short-term U.S. Treasuries, complemented by cash deposits, repo agreements, gold holdings, and a growing Bitcoin allocation now valued in the multi-billion-dollar range, alongside strategic investments. Revenue generation comes primarily from interest earned on Treasury holdings and banking spreads, allowing Tether to report multi-billion-dollar annual profits. In a notable move at the start of 2026, Tether added roughly 8,888 Bitcoin to its reserves, bringing its total Bitcoin holdings to nearly 96,000 Bitcoin. This signals a deliberate strategy to convert part of its excess yield into hard crypto assets, strengthening its balance sheet while also increasing exposure to Bitcoin price volatility. Score 8 out of 10. Hype versus fundamentals. From a fundamental perspective, USDT remains extremely strong. It continues to dominate the stablecoin market, act as the primary liquidity layer of crypto markets, and enter 2026 with growing circulation and profitability despite persistent scrutiny. The fear surrounding it stems largely from its history of controversies, recurring transparency debates due to a lack of clarity around its holdings a few years ago, and the constant cycle of Tether FUD that resurfaces during periods of market stress. While skeptics often claim collapse is imminent, USDT has consistently withstood liquidity shocks, regulatory pressure, and macroeconomic volatility. The fundamentals support its dominance, but perception risk still lingers. Score 9 out of 10. Market liquidity and volatility. USDT is the most liquid digital asset in the world, surpassing even Bitcoin and Ethereum in daily trading volume. It is listed on every major centralized exchange, integrated across the majority of DeFi protocols, and deeply embedded in global OTC and institutional markets. Peg stability has remained remarkably strong across market cycles, with only brief deviations during moments of extreme stress. Because liquidity is so deep, slippage is minimal, and redemption pathways remain reliable for major institutional participants. Despite being a stablecoin, it does react to shocks when exchange exchange liquidity dries or specific platforms experience instability, but historically, USDT has rapidly normalized after every event. Score 10 out of 10. Security and decentralization. USDT is technologically simple, a centralized issuer minting and burning tokens across multiple chains. Security benefits come from this simplicity. The contracts are minimalist and operational processes are mature. Tether also maintains the ability to freeze addresses, which has helped recover stolen funds and prevent fraud. However, the project has also faced scrutiny for having that level of power. One company controls issuance, redemptions, blacklist enforcement, and reserve management, and there is no on-chain voting nor permissionless control of monetary supply. While Tether has repeatedly demonstrated operational resilience, systemic risk comes from regulatory and banking exposure rather than smart contract vulnerabilities. Score 2 out of 10. Network activity and adoption. Adoption of USDT is truly global and spans every demographic. It is used by corporations for settlement, by individuals in emerging markets as a savings vehicle, by millions of traders worldwide, and by DeFi protocols as a foundational liquidity instrument. In regions with currency instability, from Latin America to the Middle East, USDT often circulates more widely than the local national currency. Institutional adoption has also deepened, with major payment processors, fintech companies, and liquidity providers integrating USDT into their operations. Few assets in crypto match its real-world usage. Score 10 out of 10. Scalability and technology. Technologically, USDT is not innovative in the same way as smart contract platforms or novel blockchain architectures. Instead, its strength lies in brute force scalability across many networks. By deploying USDT on Ethereum, Tron, Solana, Ton, Algorand, and multiple Layer 2s, Tether ensures it can support massive settlement volume with low transaction costs where needed. This cross-chain distribution gives USDT tremendous flexibility, allowing users to seek the cheapest and fastest networks for their needs. Clearly, Tether prioritizes reliability over experimentation. Score 6 out of 10. Regulatory risks. Regulatory risk remains Tether's largest external challenge, and this risk intensified moving into early 2026. Governments, particularly in the United States and the European Union, are accelerating stablecoin oversight around reserve composition, issuer transparency, sanctions compliance, and systemic risk classification. Rating agencies have publicly questioned aspects of Tether's disclosure and governance framework, reinforcing regulatory scrutiny. Because Tether relies heavily on U.S. Treasuries and access to the global dollar system, changes in financial regulation, sanctions enforcement, or banking relationships could directly impact its operational freedom. While compliance has improved significantly since 2021, uncertainty remains high as stablecoins become a politically sensitive topic worldwide. Score 1 out of 10. Self-custody. USDT is somewhat compatible with self-custody. Users who store USDT in their own wallets can interact directly with their assets. The ability to move stable dollars globally without a bank account is one of the reasons USDT has become so widely adopted. However, users must remain aware that Tether retains the authority to freeze addresses and intervene when necessary, meaning holding Tether in your wallet does not guarantee immunity from issuer actions. Additionally, risks such as phishing, compromised wallets, and insecure networks still apply. At CryptoVagabonds Academy, we teach you how to secure your assets, protect your keys, and responsibly manage stablecoins as part of a long-term financial strategy, because self-custody is the foundation of financial independence. Score 4 out of 10. Final thoughts. Tether remains one of the most important and most polarizing as entities in the digital asset ecosystem. Its dominance is built on real-world utility, unmatched liquidity, and operational consistency across market cycles. Yet its centralized structure, expanding regulatory scrutiny, and growing balance sheet complexity create a constant tension between confidence and caution. If Tether continues improving transparency, maintaining banking access, and navigating global regulations successfully, its dominance is likely to persist. But as stablecoins move deeper into the regulatory spotlight in 2026, years, USDT will face pressures that few financial instruments in crypto history have ever had to endure. Final score, 66 out of 100. What do you think? Let us know in the comments, and don't forget to like and subscribe for more deep dive crypto analysis. And as always, stay curious and stay hodling.